Alright, so I guess we're live now. Hey guys, what's up again? Now, I'm going to address something that many new beginner forex traders always talk about, and that's when is the best time to trade. So, for many people, we struggle with trying to make things perfect and trying to find a system that is optimized for us and optimized for the systems that we use. Some people prefer to trade during different times. Maybe you have a job, maybe you are awake during certain hours, and those are the hours that you typically love to trade. So, for example, me, I trade in a lot of different sessions. I trade in the London session, Asian session, and sometimes New York session. The session that you trade, it really depends on what time is available to you. Okay, but you have to be careful because sometimes the the time that you have available isn't really a good time to be trading a particular forex pair. Let me give an example. GBP USD, usually it's more active during London session and New York session. Okay, so if you're only available to trade during Asian session, you're not really going to get a lot of movement and a lot of volatility that you need to trade. So these are the things that you need to be aware of. You need to know the best times to trade, and you need to know the best assets to trade during those times. So, like I said, GBP USD, it's usually much better to trade this pair during London session and New York session. All right, and I'm going to show you why. Um, I have a custom indicator that I use, to show me the the volatility during certain times. I call it market keys. So let me show you it. My scripts, market keys, version 2.2. So let's wait while it loads. Let me go down to the 30-minute chart just to show you guys what it really looks like. Now, some things I want you to notice, right? um, First, let me just get rid of some distractions. Let me get rid of that. Let me get rid of that. Let me only leave the boxes so that you can see what I'm going to show you guys. Now, what I want you to realize is that yes, you are seeing boxes, but each box represents different things. This pink box, it's basically the London session, okay? And this yellow green box is the Asian session. Now, what you can see is that generally all of the pink boxes, which are the London session going into New York, are always bigger than the Asian session. Okay, so I'm just showing you guys that usually what happens is that London session for GBP USD is always the most active. It moves the most. So if you look at the length of these boxes, I mean, look at this. The boxes are always longer. Cool. London session. This is the Asian session, so it's longer. Um, Again, London session, Asian session, always longer. London session, longer. Look at this big one. I think this happened. What day is it? I think this happened last week. So this event happened, yeah, in the morning. The London session going into the New York session. And if you measure this, you'll see exactly how many pips. It's basically 180 pips. So 180 pips during London. That's a lot. And if you look at Asian, this was just like 40 pips. So this is why many forex traders they choose to trade different pairs and different times. So, like I said, typically I only go for London session when I do choose to manual trade. I use a London session. But if it's a case where I have to go to work or something like that, then I'm going to trade the Asian session. But I won't be trading using GBP USD. I would choose a pair that is more active during the Asian session. So maybe something like maybe AUD JPY. Let's see. So yeah, ADU JPY. It's not significantly bigger than the London session, but it does give a lot of movement. Let me look at AUD CAD. AUD CAD. Yeah, it's not going to be a significant amount of movement, but it does give some movement. All right. But generally, what you guys can see is that most forex volume is traded during the London session. Let me remove I'm going to remove the box for Asian so you can see everything. Let me remove Asian because that's Tokyo. Hold on. I'm trying to remove this, but it's not moving. Well, anyway, let me see something. It's not changed as yet. Let me try again. Yeah, not sure why this isn't changing at the moment. Let me check. Okay. Let me remove. Let me remove. Let me remove this. Yeah. Anyway, I'm not sure why it isn't changing how I want it to change, but it's whatever. It's just a glitch. So yeah, but based on what you can see, let me just remove the candles. Okay, so you can get a better look. All right, so this is basically what happens in the forex market every day. Okay, so all look at all the pink candles, all of the pink boxes that you see. Sorry, all of these are a London session. Let's look back at GBP USD. See, as you can see, all of the London session boxes are always bigger than the Asian session. So typically, this is when most of the volatility and most of the orders, most of the buying and selling of the currency happen during this time um, in foreign exchange trading. So all the banks, all the hedge funds, this is typically the time when they are trading. Okay, so it's always better, especially if you are a relatively new trader. It's always better for you to trade during the times which have the most volume, because what normally happens is that these times with a lot of volume they will reduce the risk of you making a stupid decision like using the wrong lot size, using incorrect leverage. Because trust me, if you're sitting in the Asian session and nothing is happening, you're going to get bored. You're going to over leverage. You're going to use bigger lot sizes than your account balance can handle, and you're going to end up losing a lot of money. All right, so definitely, this is why I only trade using the London session. Okay, so that's the only thing I do. Oh, I think I can remove it now. Yeah, all right. I just remembered how to remove it. So yeah, all of these are the London session, and as you can see, all of these boxes are pretty big. Let's look at GJ. GJ is basically the same thing. It has a lot of movement during London session. And it's not just GJ, AUD CAD. Look at these are some big candles. These are some big boxes of movement. Look at that. Let's look at another currency. Let's look at gold. Let's see what gold looks like. Gold also has a lot of big movement. Let's look at this. This is big movement. How many pips is this on gold? This is 4,000 pips on gold during the London session. That's crazy. Let's look at US 30 because I know a lot of people trade US 30. US 30, not so much. Let me look at Asian session if there's going to be a difference. Okay. Well, I guess US 30 moves a lot in Asian session sometimes. So yeah, if you want to succeed with trading, you definitely need to be aware of the best times for you to trade. So generally, I just remove all of this and I just focus on one session only, and that is the London session. But like I said, many different people they have different sessions. It doesn't really matter. You have to figure out what works best for you, what makes it easier for you to trade. Okay. Let me go back here and just explain this indicator that I created. Let me just explain what it does. So I created this indicator just to let me remove the boxes, or maybe let me just keep the boxes and just remove this. So yeah, I created this indicator just to show me when things are happening inside the market and just to show me and give me an alert of when I should be trading. So as you can see, it gave me some sell signals, some buy signals. Let me put this on the 1 hour chart to make it simpler. So yeah, you can see that it gave me a lot of signals and stuff like that. Let me just remove the boxes just to make this a little bit easier to look at. Yeah, let me change this to Heikinashi so it's much easier to look at. Let me change the sensitivity. Let me put this to 25. That way I will be able to get more alerts. So as you can see, this indicator was created specifically just to let me know when one, there's enough volatility and volume, trading volume in the market, and two, when best times to trade. So, for example, I only get an alert during London session going into New York. So if I'm in the Asian session, I won't be getting any type of alerts. But this one, this is specifically made for the London session. So this is able to give me some very good entries. As you can see, the indicator told me to sell, and I was able to sell right here, sell there, and you're going to see some parts where it failed. And for example, this sell right here, the market did not go down, the market went up. But this is why you need to have a good risk to reward ratio. And what that means, you have to risk a safe amount of lot size and pips, and your return should always be greater than what you risk. So let me give you an example. If I risk $5, I expect to make back $10 or $15. So it's the same thing with trading. If you're risking 10 pips, your take profit should be 20 pips or 30 pips or 40, 50 pips. That way, when you do get your losses, it won't affect your account balance so much. Okay, so for example, if my risk to reward ratio is 1 to 2, meaning if I'm risking 10 pips, for example, I'm profiting 20 pips. So that therefore means I only need to have a win rate of only about 50% in order to be profitable. Okay, so even though you see right here that this indicator, it gave us um, maybe a bad signal every now and then, if you have a good risk to reward ratio, you will be fine. Because the reality is, in Forex, there is no indicator that will give you 100% win rate or it's going to be right all the time. That doesn't exist. The only way you can beat the Forex market is if you have a good risk management system. Okay, so for example, let's just look at this indicator for the month of November. All right, let's just see how many times it was wrong and how many times it was right. So November 1st, we got a sell and it reversed a little, but it continued down. Second sell is down, so that's 2 wins. A buy went up, that's 3 wins. 4 wins, 5 wins, 6, 7, 8, 9, 10, 11, 12. Okay, so it lost a trade right there because this reverse 13, 14, 15, 16, 17, 18. It lost one there. 19, lost one there. 20, 21, 22. So it did about 24 trade alerts and only 21, but that's very good because that's a win rate of like 90%, and the risk to reward ratio could be very good based on how you took it. Okay, so if you were risking 10 pips or 20 pips to make 40 or 50 or 60 pips, then of course you would be profitable at the end of the month of November. All right, guys, so many people, when they're trading, they have this trading strategy and they have another trading strategy, and they're always saying, oh, my trading strategy has a higher win rate than yours, and people are always debating who has the best strategy. It doesn't really matter. The fact of the matter is that most forex strategies, they work. Okay, but where people fail is because their risk management doesn't work. Okay, so don't forget that, guys. Risk management is extremely important. Okay, so guys, if you enjoyed this video, feel free to just subscribe, like, comment, and just tell me if you want me to talk about any other types of trading or anything on Tradingview. If you want me to do more tutorials, just let me know. All right, guys. So, uh, goodbye, take care, and happy trading from Market Keys.